Good morning, good afternoon, good evening, Y Whales, wherever you are in the world. Again, time zones is that number one challenge we have. Today's a super cool one because number one, I've got one of my just absolute mentors, Lily, in the Web3 world, and we've got Ben Cowen who's here with this new project. And most of you have probably seen Ben. He's a famous algorithmic analysis for everything crypto. So made many calls, right? And also been off on a few too. But I mean, that's part of what we do is making sure that we understand what's happening behind the scenes. And sometimes you really have to dissect what happened after something was done to understand what, why, or where it could happen again. That being said, Ben, before we get into your project today, what really got you started in analysis of cryptocurrencies and kind of your overall thought of why this crazy asset class is where you like to call home?
Yeah, thanks for having me on the show. Glad to be here. I'd say it really all started. My undergrad was in mathematics. Took some cryptography. I took a cryptography class back in 2011. I briefly learned about Bitcoin. Did not invest at the time, unfortunately. Um, but I got interested in it way back then. And then when I was in graduate school, I did my PhD in nuclear engineering. There's some fellow grad students who were into Bitcoin back then, and I remember us talking about it quite a bit. And it sort of just kept growing from there. It was initially heard about it, and then more and more people were talking about it. I saw everything that happened, in 2016, 2017. And obviously, we've been following it really closely on my YouTube channel in 2019, 2020, and 21, and now 22. But I think just in general, finding something that was decentralized, this decentralized blockchain where there is a fixed supply, and you can't just mint more of it. And especially in the inflationary environment that we've been living in for so long, it just seems like there has to be something better than the current, the current fiat system that exists and that we're so used to. And so the idea of coupling all these things together into Bitcoin, it was very attractive for me. And so once I really understood why Bitcoin was created, and it was born out of the financial crisis back in '08, and understanding what its goals were. It was more like just figuring out how to build something in the asset class, and then also try to educate people on how, when an asset class is being capitalized, it can go through various boom and bust cycles. Doesn't mean the asset's dead. It just means it's currently being capitalized, and we're sort of slowly figuring out what the fair value of the asset class is.
So when you talk about education, I want to stop on there for a second. You could go do in darkness what you're doing today, holding all your thoughts and feelings, and probably keep a lot of save yourself a lot of stress around those things. What got you to the point where you're saying like you're looking at this, things are starting to click for you. You need to take this message and really speak to people.
Yeah, well, I think a lot of it goes back to um, getting wrecked many times in the asset class myself. Watching it go down 90% in 2013, and kind of thinking it would never recover again, honestly, back then. And even in 2014 and 2015, when we were sort of going sideways, we would go up a little bit, and we would all get super optimistic, and then it would just come right back down. Uh, and then we had what happened in 2016, 2017, and I navigated that a bit better because I realized it won't go up forever before having to go through some type of like long consolidation phase, whether that means a crash or not. I didn't really know, but I knew that these things can't just go up forever. And really, I think what people failed to factor in back then, and even in the 2021 bull market, or the one that ended in, say, the beginning of 2021, was that diminishing returns is a thing that has to be factored in when navigating the asset class. And so I think one of the reasons why I really wanted to start something, I mean, obviously, other than just the sake of starting a business, was wanting to show people that like there is some method to the madness. Like, I saw a lot of people would join at mania phases, and then they would get discouraged. They would sell everything and then not come back again until another mania phase. And so by showing macro charts and long-term data, the idea is to say, look, as long as you stick with it, that's really the big secret, right? It's just time is the big secret in the asset class. Um, and so the goal has just been trying to help people, see the same things that I'm seeing, and trying to show them, look, what you're experiencing today, I used to experience myself, but it didn't ultimately stop us from eventually going back up. And really just trying to help people realize that, again, there is a method to the madness.
No, I will tell you this. I very much appreciate your voice. We have new members all the time that are getting into the asset class, and quite often, I see your podcast, referenced because you do have a very much um, adult mindset around what this is. Will there be moons? Absolutely. Is it going to be every one? Probably not. Are you going to get wrecked? 100%. And I think that that's, again, a really a mature way to look at this. And for anyone that's coming into cryptocurrencies and wants to get into trading, to hear that you're absolutely going to get destroyed or lose, 100% on some of your investments is a terrifying thought. And my response is usually like, did the 70-80% swings not, did you not catch on to the fact that that happens all the time?
Right, and every time the idea is it can't ever happen again, and that it always does happen again, you know? It's just a matter of time before it does happen again. So, yeah, it's a tough asset class to navigate, but, I mean, as long as you can kinda see past those 80% corrections, as long as you realize that there tends to be like a 20x or a 50x in between those 80% corrections, um, I think you can have a better perspective on the market.
Absolutely, absolutely. So let's pivot into the cryptoverse. I want to hear the elevator pitch behind that, and then I know I've got a lot of questions in and around what you're doing and kind of where the market is today as well. So, but let's start with your main project, which I'm shocked to see there's NFTs involved.
So the Into the Cryptoverse is it's a website where you can basically sign up, and you'll get access to like a lot of different charts, like quantitative charts. One of the things that I often get discouraged by in the asset class is that a lot of the TA, right, or technical analysis can just be summed up as like drawing lines on a chart and saying it means a lot. And sometimes they can mean something. I'm not going to say I've never done it, but really the goal is to really mine the data and look for patterns in the data, and look for not even, not just patterns in, say, altcoins, but altcoins with respect to Bitcoin and with respect to Ethereum. One of the things that I think a lot of people don't consider is that they sort of write off Bitcoin and Ethereum because they're not going to give them the higher gains. But the truth is they also protect you from the downside in a bear market as well, at least relatively speaking. I mean, Bitcoin can still go down, but altcoins can go down, 99% or something. So a lot of what we have on Into the Cryptoverse is long-term charts. We're looking at like logarithmic regression, which is a great way to sort of navigate the asset class. Should I go ahead and share my screen and show you what I'm talking about? All right, can you see my screen? Okay.
Absolutely.
Yeah, so this is like one of the examples. So basically, we have all of these charts. We have like the total crypto market cap, we have risk levels, we have on-chain charts where you can go through, say, look at like the HODL waves, the R HODL waves, which are like average based, and you're weighting them based on the price. We also have social metric charts, derivative charts, and these are some of the ones that I think could probably, are a bit more helpful than some people might realize when trying to figure out, is retail still sticking around, right, or are they not? Um, but one of my favorite charts is to just look at this one, and this is sort of one of the flagship charts of the project, and it's basically, to sum it up, the red line is by definition how I'm defining it. It's the fair value of the asset class. So it's a logarithmic regression curve. The reason we use logarithmic regression is because it basically allows you to model something that increases more early on in its life and less later on, and it basically just encapsulates diminishing returns in the mathematical equation. So what I do is I look at this chart, and over the macro scale, I try to understand when things are undervalued, when things are overvalued. And for instance, right now, I mean, obviously, Bitcoin has had a bit of a pullback recently. I see it's currently trading at around $40,000 at the time of this video. And this is the entire asset class, not just Bitcoin. And it shows that we're currently still overvalued by approximately 19%. Again, we can be overvalued for a long time before going to the undervaluation territory. In fact, the last time the asset class was undervalued was back in late 2020. But this is one of those charts that tries to help show what is the macro outlook, right? What is the risk involved? What are the risk adjusted returns looking like in terms of including, say, modern portfolio theory and calculating out your Sharpe ratio or your Sortino ratio and figuring out what are those portfolio weights that maximize your risk adjusted returns. And so the whole idea of the website in general is to provide people with a way to navigate the asset class that basically kicks the emotion out of it, right? Because I mean, emotion is one of those things that it's really hard to navigate this thing if you don't have a plan, and to just say, you know what, I understand that the asset class goes through these boom and bust cycles. And the whole idea is to accumulate, right? Accumulate crypto when the market is very bearish and the risk is really low. And then to systematically take profits when the market is exuberant, super bullish, and everyone's saying it's going to go to the moon. And then to just be patient and then to wait and then reaccumulate again, right? So that's the idea of the website. And we have hundreds of on-chain charts, hundreds of all sorts of charts. We're constantly building it out. And basically it's a subscription model. So people sign up for like a monthly subscription. They can cancel at any time. And that's basically what the business is based around.
So, talked about how these charts are being generated, and Lily, please jump in here. So, are these manually or are these kind of automatically? Is there any manual curation? I guess is my question.
No, I mean, so these charts are updated automatically.
Okay.
We're not going in every day and and updating them. I mean, there's just to give you an idea. I mean, if I just scroll down, I mean, there's just hundreds of charts, and for each of these charts, by the way, just to give you an example, like if I were to click on let's go click on say the R hodl waves, right? Which is this one. I love this chart because it's a way to break things up between, say, the short term holder and say like long term holders. But I like this chart because you can quickly go to a lot of different cryptocurrencies, right? You can link at it for Ethereum or Cardano or Polkadot or Chainlink or Algorand and so on and so forth. Again, I don't own all these cryptocurrencies, but my time is limited to communicate what I want to communicate. I focus mostly on Bitcoin and Ethereum, but perhaps someone else who has access to the website, maybe they only care about, something else, right? That I don't care about, and they can still access it even if I don't talk about it. So no, everything's automatic because we couldn't possibly go through and manually update these on a day-to-day basis. It would take too much time.
No, it was more a matter of the curation of the charts, which is exactly. So your answer is yes. You've gone through and said these are the best ways to look at the data.
Right.
You're not going to give me a bunch of tools and let me draw pretty swirly charts, and do my own thing. There's plenty of tools that do that.
Right. Yeah, there's a lot of tools, and we're actually working on trying to make things like even better by setting up like alerts and stuff based on if one chart is sort of signaling something over another chart. It can get somewhat there's a lot of information, right? There's a lot of information, so we're working on better presenting that information through like an alert system or something.
Very helpful. So how long have you been on the project, and what's the size of your team that's been building this out?
Yeah, so I've been on the project for so the company. I officially started the company the very beginning of 2020, but my YouTube channel I actually started it in the summer of 2019. So I started building it, and at first I didn't really know what it would really turn into. I was just publishing like one video every 2 weeks. It actually took me about 6 months to get 500 subscribers, and then I mean the rest is history. Then it took me like another month to get to 10,000, another month to get to 100,000, and then now I think I have like 724,000 subscribers on YouTube. And by the way, I mean my YouTube is not monetized in any way other than just sort of routing people to my website, which is it's a very different business model than what a lot of people do on YouTube. So yeah, again, started in 2019. officially started the company in 2020, and so we've been running for just over 2 years. We've seen a lot of growth since then, and of course, it sort of ebbs and flows with the market. But it's been quite the journey.
So real quick, and I want to stay on this for a minute before we jump into kind of where the market is today. I did notice you're doing other things besides just selling graphs and charts. You have some NFT projects that looks like you're associating with. So it seems like you have a good embracement of Web3 ecosystem overall.
Yeah, so the NFTs are my own NFTs. I'm not like they're into the cryptoverse NFTs. We partner with some artists. Where our goal is to to provide more and more utility to the NFTs. Like some of the NFTs that we've sold actually give you a lifetime subscription to to this website, as well as everything else that comes with it. Like I put out even more videos that are just for those members, and there's all sorts of other stuff associated with it. And then some other utility is going to be associated with um, getting access to an NFT section, hopefully in the future on the website. Some utility is focused on perhaps the metaverse once I feel like it's actually being built. I still feel like we're a little bit too early in some of that stuff because I've sort of explored some of the different um, areas to explore, and I haven't really been that impressed. So I kind of think we're a little bit too early. But yeah, that's one arm of the business. And then another arm is I run validators on some of the different layer ones. And I've looked at a lot of the different layer ones, and some are worth running validators on, some are not. And that's sort of like the third area of the company.
So looking into what you've got here, and what's the current monthly fee?
The current monthly fee is 129 a month, but it's on sale for 6 more days for 99 a month.
Okay, and what's the lifetime NFT?
The lifetime NFT, well, it was auctioned off a long time. There was a couple that were auctioned off a long time
Oh,
ago.
okay.
I don't even remember exactly what it sold for, or what but it was only for the first person who got it. It wasn't like transferable or anything
Oh,
like
gotcha,
that.
gotcha.
Yeah. Yeah,
Yeah.
I don't even remember what it sold for back then.
Listen, we're degens and anything and everything, so we always love to know kind of how, because to me the utility is really where the value is, and so understanding that exists. There's you already have me saying, well, I want one. Why can I have that one?
Yeah.
So there's quite a bit there. So let's take a quick pivot, and we'll come back to this in a second. But as long as you have it up, so today, and to be clear, last night you kind of said like there's a dump coming, posted on Twitter, and 10 hours later it came. So can you talk us through kind of what you saw, how you saw it on these charts, and how someone could replicate kind of being able to follow along with you?
Yeah, so I think one of the things with crypto in general is looking at patterns, right? And perhaps I can just pull up TradingView here.
Yes.
Yeah. So one of the reasons why I got really concerned, and I was actually at the conference when when a lot of this sort of played out. But one of my main concerns right now is that over the last several months, Bitcoin, every single pump has just been sold off, right? I mean, it hasn't led to anything remarkable. Even the new all-time high that we put in November is sort of like, not really that big of a deal. It's not normally when Bitcoin puts in a new all-time high, it continues to go up, right? It doesn't just put in a new all-time high and then drop another 50%. So one of the things that I've been looking at recently is this 200-day moving average. It's not even that complicated, but just recognizing that, look, this is the same type of issues we had back in 2018, and we were unable to get back above that level. So that's sort of what has me on edge a little bit. And in addition to that, it was looking at like the futures market, and looking at the fact that Bitcoin is very much correlated to other asset classes like equities. It is behaving like a tech stock right now, right? It's behaving like a tech stock. And when you see things like the Nasdaq, it's the same chart, right? I mean, you flip between the Nasdaq and Bitcoin, they look almost identical over the last several months. And so my main concern in the short term is that you have MicroStrategy and Terra buying hundreds of millions of dollars worth of Bitcoin but it's not doing anything. Like it's not changing the price action at all. Bitcoin is still basically behaving like a tech stock at the current time. And it goes through various phases where it's correlated and it's not correlated. And right now it's very much correlated. One bear market that Bitcoin went through, it was correlated to the S&P. One, it wasn't correlated, and then one, there was like a negative correlation actually. So there's not exactly a clear trend over the macro scale when looking at Bitcoin bear markets, but over the last 5 months, it has been very much behaving like a tech stock. And so my main concern in the short term is just looking at the overall market. We also know that things like the US dollar currency index are in a very strong uptrend right now. And what do you notice about the dollar is that when it's in a downtrend like 2017 and like 2020, that's what corresponds to Bitcoin bull markets. And in addition, what corresponds to the market being bearish are things like 2014 and 2018 when the dollar's in an uptrend. And now we've been in an uptrend since June or May of 2021. And so until we see some type of reversal on the US dollar currency index, until we see some type of reversal on tech stocks, it's hard to be short-term bullish on Bitcoin. I mean, I still maintain the macro bullish stance, of course, but I also understand that, in the short term, we're very much dependent on a lot of macroeconomic conditions.
So, one of the and we're watching Bitcoin hitting their resistance level and just kind of broke through 40K. And so I don't think the next one, unless you've got a chart that's different than the one I was looking at this morning, is the next big resistance level is going to be down to about 38. Um, my question is, you've kind of said there's nothing that's really paralleling to. Some years it's this, some years it's that. How much is that related to the oracles just being wrong, or multi-counting Bitcoin versus wrap Bitcoin versus a different wrap Bitcoin versus everything else? Like, do we feel that the count is even correct?
They count on, say that again.
How
Sorry.
many Bitcoins are in existence and what the price level is based on all the various markets that are out there?
Well, I mean, the market is. I mean, if you're talking about differences between like different exchanges, I mean, anything there is arbitraged away immediately. In terms of the actual count on Bitcoin, I mean, we know there's only ever going to be 21 million. In terms of circulating supply, we know that a lot of them are lost, never to be found again through private keys that have been thrown out or just simply lost. I'm not sure. Is that what you're asking?
No, but the question would be is, and I've talked to other people that run, the bridges and whatnot, and there's not a perfect count of native Bitcoin to wrapped native Bitcoin. There's in a lot of cases we're
Oh,
seeing, double and triple counting of the asset, which it was my question was, and if that's nothing you've ever explored, then there's no real answer there. But
right.
is that the type of thing that would affect why we can't see the proper bull runs despite the massive investments in the asset class?
I don't really think so. I mean, the short answer is it's not something I've ever explored. So I don't want to. Sometimes I don't want to provide an opinion on something necessarily that I don't feel like I can provide one that's like well defined and well researched. Uh, but my gut reaction sort of just tells me that one of the things that when I look at this asset class is just looking at these long term trend lines and saying, we're just doing the same thing we've always done. It's not like there's always a narrative, of course, right? There's always a narrative behind every bull run. There's always a narrative behind every bear market. But in reality, when you take a step back, I mean, we're just doing the same thing we've always done. We went up 20x in a year. And I mean, I understand that hundreds of millions of dollars have come in recently, but you can also go look at the largest Bitcoin wallets and see that a lot of them have been selling recently. And some of the ones that aren't selling, they haven't really been accumulating much recently. There's a lot of wallets actually that first started accumulating in late 2018. They reaccumulated in the summer of 2021, and they haven't done anything since then. So, I think a lot of people are sort of at this, we're sort of at this point where, I mean, we're kind of waiting to see what happens. There's like this tension in the asset class. Is it going to hold that 30K level? I mean, I think that 30K level is a very important level for a lot of different reasons. It was the summer low. It's it's sort of the bottom of our fair value logarithmic regression, man. It's also the cost basis of MicroStrategy. I think their cost basis on other Bitcoin is around 30.8K or so. So I think what we're seeing right now, could arguably just be we're just doing the same thing we've always done. No, it doesn't really necessarily need to be any more complicated than that. With that said, I don't really fully know that I have like a definitive answer to what you asked. So I'll sort of just say like that's my gut reaction to your
Gotcha.
question, but that's my gut reaction to most any reason behind what's going on.
Can we talk a little bit about the sellers and the buyers and the support levels in this market? Because you mentioned Terra coming in, you mentioned MicroStrategy. Who are the dumping parties? Like I'm looking at a chart on Glassnode about short-term holders, short-term profit, and it seems like there's a lot of short-term loss that's being recorded, and like short-term holder supply is pretty abysmal right now. Is there any kind of flushing out of, like, I guess what they would call paper hands? Like, how is your perspective on selling and
Yeah.
support?
So one of the things that we can actually look at, actually, let me go back to these R huddle waves, and you kind of reference this with some of
Yeah,
the on-chain data. If you go to the long-term holders, what you'll notice is that the percentage of supply held by long-term holders when weighted by the realized price, you can see that that tends to go up when the market is bearish and it goes
yeah,
down when the market is bullish, right? You can see back in late 20 or early 2021, long-term holders were selling. They were selling. They didn't, I don't really know what happened back then. I mean, I didn't really follow on-chain data as much back then, to be completely honest. But you can look at this stock, you can look at these charts and say, look, during that phase, during that parabolic run-up, long-term holders were selling back then. But what you see today is a little different, right? It's a little different in terms of the
and
sellers.
sorry,
There's
then,
not.
just for long and short, do you mean like 155-day and above? Like, what is the definitions for people that
So
aren't
it's a
there?
good question. So here we're differentiating it between people who have held it for at least 6 months.
6 months.
So yeah, so like here it is for like the hodl waves,
Oh,
which
yeah,
is not.
I don't think you're sharing that screen yet.
You're still on Trading View.
Oh,
There
There
you
you
go.
go.
okay, so for instance, here are the hodl waves, and this is hodl waves for long-term holders. So one of the interesting things about this chart is, you can look at it and see where the long-term investors are coming in, and you can also look at it and see where the short-term investors are coming in. Short-term investors tend to come in at peaks, right? That's where you see these things go up. Long-term investors like to come in at bottoms or in bear markets, not necessarily bottoms because they tend to come in before we hit the bottom, but they come in during bear markets. And these are the people that sort of just scoop it up. So I think your assessment is correct. I think that what's happening right now is that the tourists are kind of leaving or slowly leaving. There's a lot of people that are probably underwater in their investment and they take any pump that comes, they take that as an opportunity to get out. And, I mean, if you look at the illiquid supply, you can see the illiquid supply is going up as well. I think a lot of long-term investors are sort of slowly eating up those Bitcoin. But the problem is that, and one of the problems we've seen happen before is that you can get capitulation events where it doesn't really make sense for it to happen. But you have a lot of leverage traders that are forced sellers. So like they might not want to sell, but they have to sell because they leveraged out of their ears because they thought the price is going to go to a certain level by a certain date, and then it didn't happen, and so then they end up having to they basically get liquidated, and they become a forced seller. So I think the people that are selling now are mostly, you have leverage traders that are forced selling. You also have some shorter term traders that sort of just trade the short term moves like off the local low back up to the 200-day moving average. There's probably some people that are that sold there. And then you also do have some whales. I mean, I know it's not necessarily a popular thing to say, but yes, MicroStrategy is buying. Yes, Terra is buying. There are some larger wallets that are not, right? There are some larger wallets that have been selling. In fact, the third largest wallet, which is to an unknown entity, depends on how much you can trust on-chain data. We don't really know if they're selling or not. We can see that they sometimes transfer Bitcoin out. They were accumulating below 40K, And then once it got back above 40K, they started offloading, 1,500 Bitcoin here, 1,500 Bitcoin there. So yeah, I mean, some larger wallets are buying. There still are a lot of sellers, and I do think there are a lot of people that are underwater, and they're sort of just taking advantage of every pump to sort of liquidate. But I do think eventually the supply will be. You can see it's going into the long term holders' hands, and then it's just a matter of time before the price goes back up, and then the long term holders take profits to the short term holders who buy it, and then the short term holders get underwater again, and we just we rinse and repeat this nasty cycle.
Hold my
So
bag.
yeah. So we had we were able to have Sailor on not too long ago and have a nice conversation with him. And I asked him point blank about the 6 million per Bitcoin. And in true fashion, got a non-answer, but a very long explanation around the long-term value. What is, and again, no financial advice, nothing here. What is that kind of upper echelon that Bitcoin can hit within a reasonable amount of time? Within the next year, based on the fact that we see inflation numbers are somewhere between 10 and 25% for the U.S. dollar. What are some of the metrics we'd have to see hit to really get that a kind of astronomical valuation?
So unfortunately, a $6 million Bitcoin, um, that's not happening anytime soon, as far as I can tell. Uh, I actually put out a video on my channel in 2019 talking about a realistic path to a $1 million Bitcoin. But even that video that I put, this was back when Bitcoin was trading for like $8,000 or something. This was like, before this most recent surge back, to 60K and whatnot. Um, but that prediction back then said we wouldn't even get to a million, unfortunately, until the late 2030s. As hard as that might be to believe for some people, I think what people don't realize is that when the asset class gets this big, it takes just exponentially more capital to move the market cap.
Yeah.
It's not something. This is why people buy altcoins, because the market cap can be moved easier, so you can theoretically make more money. You can also lose a lot of money with altcoins too. So with regards to Bitcoin, one of the things I look at the fair value fit to all data, and I say, is it undervalued or is it overvalued? Right. And I could look at this and say, well, let's say by the end of 2023, the fair value will be 73K by the end of 2023. That's the fair value. So you're talking about like 20 months from now, the fair value will be around 73K. Now that doesn't mean the price has to be 73K. You can see we go through periods of undervaluation at times, right? We could be undervalued at the time. But I would say that the fair value will not even reach 100K until late 2024. Could we hit 100K before 2024? Of course. We go through periods of undervaluation, overvaluation. But what do you not see on this chart? You don't see $1 million Bitcoin on this chart, right? It's so far out in the distance that assuming that that's going to happen in the short term, it's too optimistic, and I say that as someone who has a lot. I have Bitcoin, right? I love Bitcoin. I think it's the future, but I also think it's important to be realistic and not to put out absurd price predictions that are not going to come true. And to Michael Saylor's credit, I mean, like, it probably will go to these higher numbers that he's calling for. It's just going to take a lot of time, right? It's just not going to happen. Not going to happen next year. And also, to his credit, I mean, he was buying Bitcoin when it was at 10K, and he's got way more invested than I could even imagine myself. And I know they're up a few billion dollars, I believe. So I mean, congratulations to him on everything he's doing. But I do think that it's unlikely that Bitcoin's going to be going to several $1 million in the next couple of
Listen,
years.
if the U.S. dollar turns into Zimbabwe money, then
Yeah,
it depends.
it's
That's what I'm
possible.
saying. There's some other metrics that would come into play.
So it's possible that you could be right about that, but I also I also don't necessarily think that the dollar is going to just become worthless in the next year or two. If it does, we're going to have a lot of other problems probably to deal with than just the price of Bitcoin. Um, so yeah, I don't necessarily follow. I mean, I do think that all fiat trends to zero. I mean, I know. I mean, that's what it does. I mean, you look at the purchasing power, that is what it does. But I still would argue that it's not going to go to several million in the next couple of years.
How do you think
Really.
about like in terms of network adoption of crypto, right? I think, when ARC talks about crypto going to half a million and whatnot, like a lot of that comes from institutional uplift from ETF products and regulatory catch up and stuff. For regression analysis here, for fair value calculation, is this based on the current market size and participation size? How do you account for the growth of the broader market in general?
Yeah, I mean, I think it's already accounted for in there because again, logarithmic regression it assumes diminishing returns, and diminishing returns comes from the fact that you need exponentially more capital. This is one of the things we said before this cycle started was that institutions coming. And by the way, I interviewed Saylor on my channel back in sometime in 2021, and the idea behind the model is and that was out too. Does it account for all the billionaires that are going to come in and buy Bitcoin? Does it account for all the institutions? And my argument is that it does because it assumes for the asset class, for the price of Bitcoin and the fair value to continue to go up, we need exponentially more volume. So it assumes that the institutions are going to come in, right? It assumes that we're going to get past these regulatory hurdles and that a spot ETF might be approved so that then people can come buy Bitcoin on behalf of their clients. Like it assumes all that. If that stuff doesn't happen, then the model might fail. I mean, if the institutions can't come in for regulatory reasons, or if something like that happens, you need that money to come in to offset, just like say the selling pressure that is going to naturally be there from people that have to occasionally cash out, or maybe they want to do something else with their Bitcoin. I mean, look, there's us who maybe are very very bullish on Bitcoin and believe in it. There's a lot of people out there that just trade it because it's volatile and not because of any other reason other than that. So yeah, I do think it accounts for all of that. And despite the fact that we have had billions of dollars pour into Bitcoin over the last, or at least from these, from these some of these larger institutions, we're still trading for around $40,000, right? It hasn't actually changed anything. So I think what we really need, we just need time. We need time to ultimately see these things go up. And I do think it incorporates, it already incorporates a lot of these larger
Hmm.
things coming in.
Interesting. And then can we rewind back to what you mentioned about leverage and people in the system getting levered? What are you seeing there? Like, because if you look at the futures perpetual, the perps, right, the funding rates,
Right.
it's like mildly positive. It's not great. It's not showing like exuberance, mania, um, but it's like very tempered. How are you thinking about leverage in the system and what that indicates? Because usually it's just like kind of meh when people are not
Right.
going hard either way, right? And then to dovetail that question, like from your experience, what do you see are common kind of TA indicators that people look at for inflection points? And then what do you actually like as indicators that you think are pretty effective?
That's a good question. So I will say I'm not like the leading expert on options and futures, but one of the things I think to consider is that y- you know it certainly is healthier when people are not extremely over levered. Uh, this chart here shows the open interest of crypto futures. This is for
Hmm.
Bitcoin, and it shows a lot of different exchanges. And you'll notice that it at both peaks we saw it go up a lot, right? We saw the open interest on Bitcoin futures go up, but one of the caveats with a chart like this is that it's highly correlated to the price, right? I mean, it's highly correlated to the price. Like if I have one Bitcoin and I want to lever it. I mean, if it's at 30K or 40K, I might still lever that one Bitcoin. So one of the things we can do is we can switch this over to the native currency of Bitcoin and kind of see where that is, rather than measuring it in US dollars. And you can see we're actually moving up somewhat right now. So I mean, there is a lot of open interest on these futures right now. I also have it on crypto options as well, and we can also flip that over to Bitcoin. But one of the, basically, I think the point is, and I think what you're getting at in terms of the perps as well, is what we've seen a lot of times when you see the price going up and the open interest going up, it tends to only be a matter of time before that gets wiped out. But the reverse is also true, right? When we're going down, and you also see the same thing play out, it tends to be a matter of time before we go back up. Right
Mm,
now, I think that it's just a choppy market, and people are playing both ends of the spectrum there. Whenever we get to a resistance level, they short. Whenever we get to um, uh, to a support level, maybe they go long or they exercise some type of contract in the future. Um, but I don't really see anything in the short term changing with regards to this choppy market. I think we're at least in for several more months of very similar market conditions. In terms of inflection points,
Sorry, are these
um,
notional contracts, the one you're showing, the open futures that you just showed?
sorry, I clicked
They
off
were
of it.
like number. Oh, it's okay. Like the number. They're like the number of contracts, right? Or the number of
Um,
contracts
this is
multiplied
this
by
is
the
the open
funding rate
interest in USD. This is the open
in
interest in
USD. Okay,
USD. Yeah.
got it.
Yeah, I think one of my favorite charts in terms of looking at like inflection points is something like this. Okay, this is the risk level for Bitcoin, and one of the things that I think about is an inflection point usually means we have to go down to a relatively low risk level where basically a lot of people are wiped out. Now, what you'll notice when you look at this chart, and actually,
Sorry, how are you determining the risk level? Is this like greed and fear? Is this
no,
MACD? What
it's
is
my
the
own
actual?
formula that accounts for
Okay,
diminishing returns. It's basically just a function of like the price, the time, and it accounts for diminishing returns as a function of time. It does not account for the fear and greed index. We actually do have the fear and greed index on here,
okay,
which actually, as a brief segue, one of the better ways I think to view the fear and greed, one of the things you'll notice is that like it can constantly say 20 for like months and months and months.
yeah,
Um, but what you can do is you can take a moving average of it, and it tells you a slightly different story, right? So like here's like the 90-day SMA of the fear and greed index, and it shows you like if we're just chilling at these levels up here, it might be time to get out. Whereas when we're all the way down here, it tends to be a better time to buy, right? And that's something that people don't always understand is that like if the market is bearish, that tends to be when you want to buy, not when it's bullish, right? When it's bullish, that's when you want to start thinking about selling, at least once it gets exceptionally bullish. So like one of the things I like to say is like bull markets can make you money, bear markets can make you rich, right? If you can just stick around and come up with some type of like DCA plan in a bear market, then you can reap the rewards later on, you know. So but going back to this risk level, the idea is that we have to basically cool down for a while before we can sustain a push higher. And if we take the color out of this and just plot it on the secondary y-axis, this is what it looks like. Okay. And so after going to the highest wristband, right, the 0.9 to 1 wristband, it's happened a number of times. Four times. So I mean, this was the zero point 0.8, but zero point 0.8 to 1. Um, so this time it went all the way back down. In 2013, we bottomed at zero point 0.3 risk before ultimately going back up. Okay. Every other time it's gone all the way back down. And you can see over here, we also bottomed at around, if I just sort of zoom in, you can see we bottomed at zero point 0.3 risk as well. So I look at this like there is a chance that we do not have to have a capitulation, right? There is a chance we do not have to have one. 2013 is a great example of if you had operated deterministically and assumed we had to have had a capitulation after the first peak, you would have missed out on the mania phase that the second peak brought. But we also can see that it could happen, right? I mean, it would be foolish to say that it can't happen. So I think what you have to do is you have to come up with a strategy to navigate the asset class no matter what happens, meaning being somewhat diversified across, maybe you have your crypto, you have your Bitcoin, you have your ETH, but maybe you also have some stable coins on hand earning interest somewhere so that if the market does dump, you can come in and continue
can
to
I?
buy. I mean, for full disclosure, like I have Bitcoin. I'm still buying Bitcoin. But I also think the next several months are going to be fairly volatile. I don't think we're about to go put in a new all time high. I think it'll come, but I don't think it's going to be in the next few months.
Can I ask a question? Just kind of your thought about how to think about the weightings of these indicators. Like in the first one you showed, it was the log regression underperformance one, the fair value one, right? And it showed that we're 19% above fair value right now. So that
Oh,
seems to be like, there might still be room for some bump down. And then the last one you showed, it seems like BTC risk is getting pretty low, which
right,
should indicate a buy, like a
right.
signal, right? So like, how do you weigh those two signals and how do you think about action points?
It's a good question. Yeah. So for me, what I do, generally speaking, is I buy Bitcoin when it's below the point 0.5 risk level. So if it's below point 0.5, I buy it weekly. However, the trick, or maybe it's not the trick, but my strategy is I weight my buys differently. So when we're between point 0.4 to point 0.5 risk, I might buy like X Bitcoin. When we're between point 0.3 and point 0.4, I would buy 2X. When we're between
I
point 0.2 and
see.
point 0.3, I buy 3X. And the reason I do that is because I want to get my cost basis down as low as possible. But in the same manner that I DCA in, I call it dynamic DCA, right? Because you do it dynamically as it goes down. And if the idea is that if we go all the way down to the lowest risk level, that's when you really push in heavy on whatever stable coins you have remaining.
Yeah.
But in the same manner, as we go up between the point 0.5 to point 0.6 risk band, I sell Y Bitcoin between point 0.6 to point 0.7, 2Y, point 0.7 to point 0.8, 3Y. So basically, I figure out whenever we go above point 0.5 risk, I just say, all right, I have, you know, a certain amount of Bitcoin. I divide it up into 15ths and I sell 1/15th in the first wristband, 2/15ths in the second, 3/15ths in the third. And then so that means in the final two wristbands, I'm selling 2/3 of my Bitcoin at those highest risk levels. So that's the
Oh,
way I
got
currently
it.
do. That's the way I do it. So I do buy some Bitcoin at these higher risk level, like at point 0.4 to point 0.5, but I don't buy nearly as much as I would in say like the current wristband, which I'm buying more. And if we were to go even lower, then I would buy even more.
Gotcha. Can we nerd out a little bit on your risk units? Like, how are these risk units defined? Is it like relative to fair value? Is it like how are you defining risk
Yeah.
units?
Yeah, so here it actually has no relation to the fair value. One of the goals was to try to make various indicators that are not highly dependent on one another, because if all of them are dependent on the same thing, then
Yeah.
you're basically just modeling the same thing in different
Yeah.
ways. Um, so, yeah, this is all it is. I mean, simply put, all it is, it's looking at prior performance, assuming that whatever Bitcoin does in the future will be a diminished form of what it's done in the past. And I'm just sort of dubiously extrapolating out the that function of diminishing returns as a function of time. So it's not really anything more complicated than that. It has nothing to do with the fair value. It has nothing to do with any of that stuff. You could come up with a similar type metric, and that's actually something we're working on right now. Is coming up with not only this risk metric, which is sort of the main one that I use, but the goal is to come up with multiple risk metrics. And let me give you an example of what I would consider. I don't know that I want to call it a failure, right? But it's something that I've learned. Okay, maybe it's a failure, right?
Hey,
Maybe it's
lessons and learnings are
Yeah.
welcome
yeah,
around here.
yeah. So this worked out really well during late 2020 and early 2021. Like you can see how well like this strategy worked out. And I took a lot of profits back in early 2021, and then I reinvested a lot of that back in the summer of 2021. But one of the things that kind of hit hard is look what happened. I mean, we went back up, but the risk level only went to 0.56, 0.55. I believe it peaked here at around 0.567, right? You can see that was the highest. I mean, it went slightly higher because that's according to a closing price of 66K. We know we went to 69K, so it probably went to say 0.58 risk or something like that. But what that means is that I didn't take very much profits at all at this second during that second move. You know, and I think one of the things, and you can also see there was a similar move in 2019, right, where it only went up through some of the risk bands, right? So that's the reason why say dynamically DCA. That way, if it only goes into one or two of the wristbands, at least you're getting something out, right? If you only wait for the higher ones, there could be these little bunny hills here that go up, but they don't actually take you to the higher ones. I think what I'm working on what I'm working on right now. I think what I need to do, and what we've been working on is looking at a lot more indicators, and some of those indicators are social metrics, and I think this is something that was missing. For instance, if you go to say new comments on Reddit, right? If you go to new Reddit, I mean, these are silly things, right?
No,
But one
no,
of the reasons,
I completely agree. I spent way too much time on Lunar Crush, and I absolutely get it. But you know,
right?
Right.
Yeah, I mean, so one of the reasons why I think it's somewhat important is because, and I knew this was happening back in October and November. I said it all the time on the website. I was like, look, guys, the money that's pushing Bitcoin higher, it's not new money. It's just us. Like, it's not new retail investors. You can see that retail sentiment was dying off even when the price was going up. Right, the price is going up. Retail engagement was decreasing, yeah, amongst a lot of different places. So what I'm working on now is trying to figure out, obviously there's going to be times where well, hopefully, right, where Bitcoin goes parabolic, and you can basically take advantage of these major parabolic mania phases where you can systematically DCA out. But can there be other metrics like in 2019 and let's say late 2021 that despite the fact that the risk level did not go that high, perhaps there would have been some other indicators that could have been a bit more helpful in showing, hey, yeah, the price is going up, but the sentiment just isn't there right now. And so if we want to think about it like a failure of the risk metric, that's fine. What I'm trying to do is to try to create some type of a larger dashboard where we have a risk metric for every indicator, if that makes sense. So basically, you go down to say, let's say you wanna have a risk metric on the R hodl waves, right? Or actually, here's a good one: the R hodl ratio. And you want to say, okay, I just want to know what the risk is based on historical performance, and you aggregate the risk amongst, say, 100 different charts, or more, and then you try to look for some confluence among different indicators to try to figure out, hey, can I get any alpha out of looking at everything as a whole rather than just looking at one single chart? So that's what I'm currently working on to try to navigate things a little bit better in the future.
So one of the things, Ben, that I think is massively important is market cap, and most of Reddit has no idea of the concept when they're calling for certain numbers. They just want to see something continue to go to moon. How on here are you representing market cap and able to compare it to real world metrics for people to understand? For Dogecoin to hit $1, or for Shibu to hit 3 cents. Like, what a massive market cap that would be.
Yeah, I don't actually have anything on the website where that might not be a bad idea, actually. But I don't actually have anything on the website to try to show people how ridiculous some price predictions are. I will occasionally make videos where I say, like, look, I know you guys want to see Doge go to $2, but I mean, like, it's just not going to happen, at least not in the foreseeable future. And a lot of times the price predictions of a lot of altcoins, I tell people, look, that theoretically could be supported, but only if Bitcoin is at like a market cap like 5 times larger than it currently is, because a lot of people put out price predictions for altcoins that are like 10 times the market capitalization of Bitcoin.
Oh yeah.
And if history is any indication, I mean, Bitcoin's been number one, for forever. I mean, since the asset class was invented. I mean, it's never relinquished that number one status,
Or
so
even
there's
close to it.
right. So there's no reason to think that. Well, actually, in 2017, Ethereum did come close, within a few percent of flipping it. Actually, when the Ether Bitcoin ratio went to about 0.15, it came to within like a few percent of flipping it. It didn't, but it did come close. So one thing though that is somewhat useful, I guess, is looking at this chart. This is called I like this chart. It's called the Does It Bleed chart. And so what you can do is you can go in and look at some projects and say, do they bleed against Ethereum? And a lot of coins do bleed against Ethereum. You can, and it allows you to just quickly go in and say, you know what, Litecoin is one of those relic coins from a while back that some people have in their portfolio. And I always ask, why? Why? Like, all it ever does is go down against ETH. Like, I mean, on every time frame, it's down against Ethereum. Some of these things just go down. You can flip this to Bitcoin as well and say, look, some of these coins that you guys have crazy predictions for, they tend to go down against the blue chips over the macro scale. Yes, in the short term, they can outperform. Yes, some of them will still market share because they'll have, they'll just be really good projects. But 99.9% of them, while they might go up in the short term, and you might believe in this crazy price prediction, they will eventually bleed against Bitcoin and or Ethereum. So this is probably one of the charts that you can look at to try to identify that. But I don't have anything that really necessarily shows how insane some price predictions are.
What are some common mistakes that you see? Like, people that get into the space and start wanting to do TA, like what are some of what are some of the indicators you think are the least useful? Just total waste of time. What are some of
I
the
mean,
mistakes that you see?
a lot of traditional TA, I think, is completely useless, like head and shoulders, inverse head and shoulders, randomly drawing lines on a chart and assuming they hold. Obviously, in bear markets, support lines can become memes because they just keep getting broken, So it's like everyone likes to call the bottom based on some line, but the reality is that it's too hard to predict. Like drawing a line on a chart isn't necessarily gonna save you if if the stock market dumps, like it's just going to take out that low. So I would say that most traditional TA, in my opinion, is not useful. But I should say I should caveat that with also saying it might just not be useful to me. It doesn't mean that other people haven't figured out ways to make it useful. I'm sure there are people out there that are successful doing that kind of stuff. Um, because there's always people that are developing trading bots and doing that kind of stuff. But I feel like for most people, it's not really a tenable path to go down. And that if you do try to trade those shorter term moves, you're likely just going to lose money and you're going to have a crazy tax bill, at the end of the year. Um, so I would say momentum is a great thing to use. Is It's one of the few things that I think makes a lot of sense. Um, and also just looking at the macro charts and recognizing that, look, I mean, even if you go look at some of the stuff like the return on investment of Bitcoin and realizing that sometimes you just need to be patient, right? You just need to be patient. And these things are what speak to me, right? Like looking at things like the 4-year ROI and seeing that the lowest it's ever been is around 2.5x. Um, Even looking at, say, the 3-year ROI and realizing that the worst case scenario historically is that you're breaking even or maybe slightly worse, even over 3 years, but it tends to be much higher than break even. So I think that the common mistake that people have is they come in and they assume that they can apply these indicators and that they're going to work out. And the reason they do that is because in a bull market, they often do work out. And the reason they work out is because we all have a bias in us, right? We always want Bitcoin to go up, right? We always want it to go up. So as long as your TA ends with and then it goes up, you're going to keep believing that you're just some savant at technical analysis and that every pattern is going to work, but in reality it's just momentum is taking the asset class higher. Those same patterns that you maybe relied on once upon a time, a lot of times they just don't work in bear markets as much. And I know there's a lot of people out there that are going to wholeheartedly disagree with me on this stuff, and that's why I do want to I want to remind people that I should remind you, it's not that there's no value, it's that I can't personally derive the value from it. So I don't focus on it. There are people, I'm sure, that can derive value from those things.
Ben, do you believe, short and long term, that a human trader, individual trader sitting behind their desktop can be competitive with the AI, that's moving into the space?
That's very
I don't,
pointed, Jay.
well, I mean, look, there's always going to be some people out there that I'm sure can, because if you take a large enough group of people, there's got to be someone that occasionally gets things right more than wrong. But as someone who's looked into that myself, as someone who sits in the, I mean, you've seen my channel, you know how much I study these things.
Yeah.
As someone who studies it all the time, I can assure you that I would lose money if I tried day trading. I would. Um, and that doesn't mean that there's people out there that aren't better at me at it, but I think that most people would honestly be better served not worrying about the day-to-day stuff, because I think most people that try it out ultimately, they just get wrecked. And by the way, a lot of the bots that I have tried out some of the bots just out of my own personal interest. They do somewhat well in bull markets because they're just riding momentum and they swing trade between various coins based on momentum. And in a bull market, like everything just keeps going up. Also, just holding those cryptocurrencies, you would have done well as well if you just be patient. But in a choppy market like we're currently in, or in a bear market, those strategies often do not work out, and they often bleed. And a lot of the algorithms that I looked into, that I personally tested out, a lot of them did not even keep up with Bitcoin in a choppy market. So I do think that we have a bias to believe we're really good in a bull market, and then bear markets have a way of reminding us just how brutal the market can be. But bear markets also have a way of teaching us better practices to do. And then we kind of forget those when the bull market comes back.
You talk about macro a lot in the crypto sense. Is there a way we can take a step back and talk about macro in the meat space sense, kind of what's going on with the Fed, what's happening to tech stocks? We touched upon that because, per your point, right, correlations are very high. Um, like whether or not it's gone from bird or or whatever it is, like macro indicators outside of crypto that you think could have real impact.
Yeah, I mean, so it's interesting because there's so many different ways you can look at it. One of the things you'll notice is that when the Fed hikes historically, look at what happened in 2017 actually. Bitcoin put in a peak during a rate hiking cycle. I mean, it was in the middle of one. It wasn't before one started. It wasn't after one finished. It was actually in the middle of one. Bitcoin went on to put in a macro peak. I think part of the issue is, what is the Fed going to do? Right? They say don't fight the Fed. Are they going to give us a soft landing, or are they going to overcompensate and potentially lead us into a recession? I mean, we saw the yield curves invert recently, and a lot of times that tends to signify that over the next, I don't know exactly 12 months, 18 months or something, that there's a good chance we're going to see a recession if history is any indication. I think there's a lot of pressure on the Fed right now. What are they going to do? I mean, but they don't really have a good option, right? I mean, do they raise interest rates into a slowing economy and continue to spook investors and potentially cause the market to remain weak, or do they pivot and go back into QE, which, while it might make all of us happy in the short term if all of our assets are going back up, it's not going to help the inflation issue at all. um, one of the interesting things about stocks is that they have gone up in price, but if you divide the S&P by, say, something like the money supply or something, they haven't done anything in a long time. I mean, you could argue that they haven't really increased in value that much. It's just there's a lot more money out there. And so but the value of the actual US dollar has gone down a lot. So I think that from a macro perspective, the Fed is in a very tough spot, and similar to prior. I mean, there was also the taper tantrum of 2013, where everyone freaked out when they were basically all of a sudden going to start tapering. Now they've been advertising it constantly for months and months and months, because I think they wanted to avoid any types of surprises. My thinking is that, because of the fact that we are seeing some slowdown among a number of different places, and because the Fed is somewhat hawkish, I'm just not expecting I'm not expecting the crypto asset class to immediately skyrocket, right? I'm just not. I think it's on the path to going much higher, but in the short term we need to consolidate a bit longer. And in terms of equities, in terms of tech stocks, again, when you see things like the DXY, when DXY is going up as quickly as we are right now, when the angle of attack, right, when the slope is like this,
Yeah.
we're risk off, right? We're just risk off, and we've been risk off since November, really. And so, as much as we like to believe that Bitcoin is a risk off asset, it's not. It's a risk on asset. I know everyone likes to think that it's a risk off asset, but it's also funny because precious metal like gold is a risk off asset. But gold hasn't done anything in 10 years. So I don't even know that I want Bitcoin to be a risk off asset if it means it's not going to do anything for 10, 20 years at a time. So Bitcoin and crypto, they are risk on assets right now. With how hawkish the Fed has been, obviously we're in at least a somewhat risk off environment. And so that's why I think, for a few more months, we have a bit more chop to get through. But we will ultimately prevail and head to six figures in the next probably couple of years, if I had to guess.
That's awesome. What are you seeing in the asset class? It can be a coin, it can be a project, it can be, really anything that's kind of had your interest. I'm sure you're exposed to so many things on a daily basis.
Yeah, I don't really. I do make a habit of not talking about micro caps on my channel in general. So I will stick to that. I'm not gonna.
Oh, I was gonna say this is not your channel.
I know, but I don't want to give anyone reason to, just from like part of the issue is that we don't really know what the SEC is going to do with relation to regulation, and are these securities, are they not? Um,
I,
what needs to be disclosed, what does not need to be disclosed. Look, I think some of the things in crypto that you should be focused on in general. Obviously, layer ones are a big deal, right? Obviously, layer ones. You clearly have Ethereum, which is the blue chip of layer ones. But there's also a lot of other layer ones that I think are useful in their own right. And you have to remember when you're picking a layer one, you have to remember that it's a compromise between decentralization, security, and scalability. And there's not a right answer, right? It's just, what do you think is the most important? I tend to value decentralization over a lot of other things, but there are people that don't. I mean, like, look at what happened to the Binance Smart Chain. And I mean, it's one of the most centralized chains, but it's number three. I mean, so just what I value isn't necessarily what other people value. I will say layer ones in general are where most of my money is, other than Bitcoin. Other than just having the blue chips of Bitcoin and ETH. In terms of altcoins, most of my money is in layer ones. Beyond that, I do think some of the most interesting things that are going to be coming up over the next few years are going to be crypto and how it relates to the gaming industry. Uh, maybe things like play to earn, that kind of stuff.
yep.
But I think one of the problems right now with the play to earn stuff is that we have a lot of crypto people. I've said this a few times. We have crypto people making games rather than gaming people using, integrating crypto into their games.
Yep.
So it's like people are trying to incorporate crypto into something that they're not an expert at. And I've looked at a lot of the games. I'm not saying that none of them are fun, but a lot of them are they're just boring. Like they're
Oh,
not.
you can call it Axie Infinity right here. I have no idea how anyone plays that for more than like
Well,
18
yeah,
seconds.
I mean, look, and I walked through Decentraland for an hour, and I'm just like, there's just nothing to do here. Like there's just nothing to do. Um, so I look at that stuff and I say, we're just a little early. We're a little early, but I think over the next couple of years, there's going to be some really good investment opportunities in some of these gaming platforms. But I think what you need to look for gaming people incorporating crypto rather than crypto people trying to become experts on how to make a good
Yeah.
game.
We
um
just had a
so
call about that this morning, actually. Anyways, totally random. That's a whole nother
right.
podcast. Sorry.
And then
Um,
and then DeFi, DeFi in general, I think is a big area. And look, one of the things with DeFi has been in a bear market. A lot of DeFi has been in a bear market for a long time. Some of the DeFi projects haven't done anything since the summer of 2020. Not at least with respect to Ethereum. A lot of, like, if you look at Aave, the valuation of Aave against Ethereum, it's down like 90%. Look at the value of Chainlink against Ethereum since summer of 2020, it's down 90% too. So, I
are you an
look at these.
ETH maxi?
I'm not an ETH maxi, but what I would say I am is I I look at risk adjusted returns, right? Ethereum is less risky than some of these other projects. And if all these projects are going to do is bleed against Ethereum, you need to understand, like, why are you taking on more risk for less reward? I say that I have a big position in Chainlink, right? I do, because I think Chainlink is a good project. With that said, it hasn't stopped it from getting wrecked for the last 18 months against Ethereum. But one thing to consider, if history is any indication, is that, and again, like, I say this as someone who has been bullish on Chainlink for a long time, and I've just watched it go down 90% against Ethereum. The time that Chainlink did the best was during the last bear market. So if the market remains bearish, maybe that'll be time. Maybe that'll be Link's time to shine again. Maybe that'll be when DeFi explodes. Remember, DeFi exploded before Bitcoin did.
Yep.
It did it in the summer of 2020. It did it before Bitcoin. So crypto is cyclical, right? It's cyclical. For a while it's DeFi, and then in 2021 it was layer ones, right? But in late 2020 it was Bitcoin. So it's cyclical. There's like a money ball, and it goes around from one thing to another. So I think it's only a matter of time before it does come back to some, and that's not to say all DeFi projects didn't do well. I do think it's only a matter of time before we come back and we see some of the DeFi projects go up again. But do they have to? I mean, they're already down 90% against ETH. I don't know. Do they have to go down 95% before they recover, or 92%, or are they already bottomed? I don't know. But I do think a lot of them will eventually recover. But one thing to remember is that a lot of altcoins, especially as you go down the list, a lot of them never make new all-time highs in future bull markets. So you need to focus on the blue chips and the ones you have the most conviction in. If you look at a historical snapshot of the top 10 5 years ago, there's a good chance that new investors don't recognize half of them. Okay, so you need to remember that.
So you've hit on every single thing. I'm going to ask you one more question before we close. What's your thoughts on DAOs?
Yeah, I mean, I think that I don't really. I'm trying to like phrase it, and I'm trying to phrase it.
Yeah.
I do think they are a good thing. I don't think they're bad or anything. But I'm not currently that interested. I guess I should say.
It's very early for the technology.
Exactly. It's like to me. It's like the metaverse play. It's like the play to earn gaming stuff. I think it's good, but I also feel like people are trying to front run it a little bit before it's really time to shine. Like I do think we're gonna get there. Like a lot of these things, I think we're gonna get there. But one of the bad things about bull markets is that it makes it so that people don't innovate. They chase trends. Bear markets is where innovation occurs. That's where people have to innovate, because if they don't innovate, they're not gonna see any cap. The people aren't gonna invest. In a bull market, you chase whatever the most recent trend is, and people just copy each other, right? They just copy each thing. So yeah, like you said, I do think it's just a bit early. I think a lot of it's a bit early, but also it makes me really excited for the next bull market, because I think over the next 3 to 6 months, there's going to be a lot of good investment opportunities. And it's the people that stick around, right? If you can this is what I beg people to do. I'm like, just stick around, right? Even if you don't follow me, even if you think I'm full of it, and you don't agree with anything I say, just stick around, and I think you'll be pleasantly surprised with what will eventually occur. Even if you have to take a break from crypto for 2 or 3 months, just remember that we go through boom and bust cycles, and that it's just the cyclical nature of crypto. And I'm really excited for what the next bull market has to offer.
I think
Then
to
I
your
really,
point, if
really thank
you,
you for.
oh,
Oh, go
oh
for it, Lily.
no, I just wanted to say, like, I think DCA and bear markets plus smart angel invest in new protocols in a bull run, you'll do really well. I think
Right. Yeah, that's the thing. It's like and some people say, well, Ben is bearish or something. I'm like, yeah, but I like being bearish because that's when I like to buy. Like that. You buy when the market is bearish. I mean, we don't know where the bottom is, right? The bottom could be already be in for all we know, or the bottom could be at 25K. No one knows. No one knows. But the point is if you just keep your head low, you come up with a plan, you DCA for 6 to 12 months or something, or maybe longer, right? 18 months or something. Like eventually you should be rewarded. It's just try to not get so focused on the day to day. It's funny too, because one of the things I like to say is that today's, or like when the market's going up or down, it's like today's FOMO price was yesterday's FUD price, or something like that. Like like we're at 39K today. We're at 40K right now, right? 4 weeks ago, 40K would have been like FOMO. Today, everyone's super fearful. So it's all relative. It's just all relative how people's moods are.
Yeah, it's funny. When Bitcoin's at 60K, my phone is ringing off the hook. Emails are coming in. How do I get buy more Bitcoin? Da, 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 da. And I'm like, I'm really not that interested in $60,000 Bitcoin today. And then Bitcoin down at 30,000. I'm like, hey, you guys really should look at going in. Well, isn't it going down? Yeah,
Right. Yeah. That's when you buy. Like you buy when it's bearish. And that's you can see the people that have the conviction, the long-term people, they're
yeah,
the ones that are accumulating. Like those are the people that are accumulating. They also don't care if it goes down. I
yeah.
mean, if it drops another 40%, they don't care. They just keep buying. That's where we are right now.
It absolutely is. Lily, thank you so much for your time today, as always. Ben, really fabulous.
It was
Absolutely loved
fun.
meeting you and seeing the platform. I'm absolutely going to be checking it out here. And Y Whalers, you can bet are going to be playing around on this platform as well. So, to everyone watching, that's Ben and Lily. Thank you guys so much, and we'll catch you guys next time.
Thank you.
Thanks.